Hey, hi everyone, and welcome to the last BGL and Smart SMSF update webinar for the year. So we thought we'd do something different. We did the same thing sort of last year, and Aaron and I have decided to do a year in review rather than just focus on one particular month. So we'll recap everything that's taken place there for the month. Housekeeping as per normal, today's session will be recorded. So if you do drop out or need to share with colleagues, you do have that ability. Any questions you have, enter them in the Q&A panel. We've got several team members there from BGL who are signed in and ready to answer any questions. So Aaron, you've joined me all year, and probably need no introduction, hopefully, but you're CEO and obviously co-founder of Smart SMSF, but welcome Aaron.
Thank you, Jeevan. Yeah, and as you said before, I think it's a good time to reflect on what's been happening. And we had a conversation just before we jumped on, and where I asked you, did you get everything done that you wanted to get done? And I think the short answer is you never get done everything that you need to get done. But when you look back and reflect on what has happened, and that's really what today is about, is to understand just how much progress we've seen. Not only I'll talk about what's happened from the SMSF sector, but then also when you look within what the team at BGL have done right across their products, you can see the enormous amount of work that has been provided to help individuals, and equally in terms of what we've been able to do off the back of a lot of the legislative change in terms of not only our education, then also through our document suite as well.
I completely agree. So it's always good to reflect, and sometimes you do miss. So as per normal, I guess we're not covering a lot of things in detail today, so we'll be very high level and summary. But if you want more detail, all the sessions from during the year have been recorded and are available on BGL's YouTube channel. I saw Andrew just sent through a question about the last recording. I'll follow up post today's webinar where that's at, because it should be there and it's not as you clear, or it's not being listed correctly. So I'll follow that up after today's webinar. But as I said, go back and into more details, or ask a question in the Q&A, and one of our team members can send through a link as well. So let's go through month by month. So January, traditionally a quieter month on all fronts. Most people are on leave and everything like that. In the background, we did start releasing some new features. Traditionally at BGL, we tend to push a lot of behind the scenes updates in January. So the team's still busy working away, but there's a lot of changes that you don't see that really set us up for the next 12 months ahead. But during January, we did deploy our new Smart Report screen. So that's, as you can see there on the screen, the ability to view financials as a sort of live report, to be able to go into detail. And there wasn't that including the AI analysis as well, which we actually released just before the SMSF Association conference, sort of late January, early Feb there as well. Moving across there to February. So again, in terms of features in Simplify and SimpliVest, we released our new audit management screen. So if anyone who hasn't used this screen before, where this came from is during the previous year, we released a new workflow screen. So you'll see on the screenshot there, the second menu item down, workflow. We didn't have any sort of tracking or any information around the audit, apart from the audit date, completion date, which is stored in the tax return. So we added a new screen here, as you can see, and the benefit of that is actually tracking the status of your overall audits, where they're at, who's actually doing the audit, where you're actually, utilizing multiple auditors across your firm, and then obviously storing things like additional documents, allowing auditors to push in information and I suppose update their screen as well. Some of our partners, such as ASF audits, do actually then update the screen using our API as well. So it means it's a very hands-off approach in terms of updating that information. Across to our work papers, we released into there the income tax reconciliation. So under the tax work paper, you'll see a dedicated sort of worksheet there to actually reconcile then what the actual tax payable figure is back to the underlying ledger, where you can put in adjustments of your own, etc. there as well. We did allow, traditionally again, just documents were uploaded into the work papers screen. We did allow then URLs to be uploaded as well. So, for example, you might have something like a trustee, which has been scanned in quite a big file, and you've got it there in something like, let's say, Dropbox or in the Smart SMSF platform potentially. And then you can actually just copy and paste a link in there. And obviously, as long as you've got a login to that third-party platform, you can access that document rather than actually having to download it and upload it into the work paper screen. We then also within our work papers allow the transactions to be viewed for the underlying either sub account or normal account, depending on the type of account, and obviously being able to expand that out. Moving across there into March. So March again, audit management, as I mentioned, we can continue to extend that, and we allow triggers to go through into the workflow screen. So what this means is, as you can see there down below, things like when the status changes on the audit management screen, the job tracker on the workflow screen is automatically updated. And the same applies for things such as tax lodgements and work papers as well. As soon as the status changes, the underlying workflow screen will automatically be updated. So it means you don't have to manually update a checklist or manually update a spreadsheet about where the job's at. Work papers screen. So again, we continue to improve the work papers. So we improved the last date refreshed and put a timestamp in for those that are updating multiple times. We provided the ability to update the document or file name, and that was across both the work paper screen and also in the document screen as well. We allowed admin users to modify notes, as you can see there, and allowed sorting there on the transaction view. So from a BGL perspective, we also ran our masterclass series. So the masterclass is really about best practice and getting the most out of your BGL software. And we ran that across 5 different cities. So LA, Perth, Melbourne, Brisbane, Sydney. And the 2025 masterclass, the registration's open for that. So if you go to the BGL website under events, you'll see the 2025 one there available. So Aaron, haven't forgotten about you. So March was a busy quarter. Are you on mute? Aaron, you're on mute.
That'd help if I turn that back on. Excellent, thank you. Yes, so March was a interesting quarter because, as I referred to throughout the year, probably the biggest area that we saw was the ongoing saga of what was Division 296. So from that point of view, I guess from the very beginning, we saw the stage 3 tax cuts introduced. So we initially had the Labor Party indicating that they were not going to be making any changes in that area. Ultimately, we did see them make those changes, and those changes, of course, took effect from the 1st of July 2024. It was during that quarter that we then also saw the legislating the objective of super bill and the better targeted superannuation concessions measures, i.e. the Division 296 tax laws, where the additional 15% tax on balances above 3 million. Both of those were introduced into Parliament. And as we moved through the year, we saw very much a seesaw of activity going on in respect to the finalisation, or in some respects, the lack of finalisation in respect to some of these measures as well. The other thing that we have occurred during that March quarter is we get confirmation of the December quarter CPI and AWATI figures. So in the February period, we had confirmation of the AWATI figures, confirming therefore the increase of that concessional contribution cap from $27,500 to $30,000. So as we moved into this year that we're in now, the financial year, we had that increase not only to our concessional cap to $30,000, but naturally it has that 4 times multiple for our non-concessional contributions as well. And the other one here just worth noting was around the ATO's targeted campaign on market valuations. And this is clearly an area that the ATO is spending more time on, the fact that we need to ensure that we are meeting the market valuation requirements of fund assets each and every year in accordance with Regulation 8.02B. So there was a targeted campaign out to both trustees themselves, around 17,000, and about 1,000 auditors that were linked to those funds, just reinforcing the fact that market valuations are a requirement, and the information within the regulatory return was that that information around the valuation was or did not change over that 3-year period. So again, just the ATO is using statistical information to look at issues of concern, and then they use these targeted campaigns where appropriate just to highlight some of those issues. And I guess on the Smarter SMSF side from us, we did introduce our Smarter Legal Review. So in forms such as the ability to get your trust deed upgrades for things like changes of trustee and so forth, the fact that when you order those documents, you can request to have that legal sign-off obtained as part of that process, or where you have documents that are deficient, there are errors, you might be missing parties, there might be spelling mistakes, missing dates and so forth. You have the deed of rectification process introduced into that as well. So Jeevan, that pretty much takes us right through to the end of the March quarter.
And you ran a roadshow as well. So
we did. Yes. So yeah. So it was March. Yeah. So the March there period, we go around Australia, around 5 capital cities, and looking forward to doing it again. And I'll talk a little bit more about that during the year. But it's great to get the, I guess, face-to-face interaction. So you can see there we have tables. It's not just myself and Tim, and I know BGL's been a supporter of these since day one, which I'm certainly very grateful for. But the fact that you get to interact with, accountants, administrators, auditors, financial advisors, as lawyers and so forth, and really working through technical content, relevant stuff. We spoke about Div 296 and NALI and all those things, and then utilising our case study and interactions and activities made them a hugely successful roadshow during 2024.
So on to April. So the Smart Report screen was extended to include both the trial balance and general ledger. And of course, the AI analysis does include that. And I can see someone asking where can they actually access this? So this would be, I can show it maybe at the end, but under the reports menu, you'll find Smart Reports, and then you'll see a button there, AI analysis. SuperStream. So we allow the ability for firm notifications. So obviously, the hardest thing there with SuperStream is, timing, dealing with all the different super funds and their different procedures, different processes, different timing, etc. So when something comes in, we do provide the ability now to, doesn't matter which fund it's for, to have a firm-wide notification to email you and let you know there's been an update on the status of that particular either rollover or event. May. So May's always a fun one that normally leads for us just before the actual tax season. So just as Aaron mentioned, that the contribution legislation was updated. We obviously updated in the software then all the new limits for the new 24-25 financial year onwards. So they will include across dashboards, reports, wherever you do see contributions. In terms of our practice management integration, so we've got an existing integration there with Xero Practice Manager and also MYOB Practice Manager. This now obviously was extended to include APS Practice Management. All these integrations, if you are using one of those practice management systems, it allows you to sync your clients and contacts with those practice management software. Any updates into the PM system will be automatically updated in BGL software. If you are using CAS 360 as well, it will automatically prepare a Form 484 so that the change form can be prepared and obviously signed and launched through to ASIC as well. And just keeps really those systems, the ultimate holy grail of all the systems talking to each other and automatically updating. Tax time. So around the 24th, the actual, obviously, 2024 tax return, there wasn't many changes to the actual tax return itself, but there did include the new schedule there in around the trust distributions, which is, it hasn't caused too much headaches and pains, but it's just obviously another process, another checking mechanism. And obviously, the more different investments that the particular SMSF or trust or company has, obviously, the more those schedules that need to be prepared. On our Simple Invest side, we did include then the ability for a family trust election to be lodged as either a separate form or with the trust tax return there as well. So that was something that was new and across. So June, June busy as always. So on the SMSF side, we included a fund snapshot report. As the name suggests, it provides a snapshot there of everything from a tax point of view, contributions, pensions, and investments. So it's good sort of, depending on how much data is, I'd like to say one pager, but it might be a 1 pager, 2 pager, 3 pager, but a nice, quite succinct report that gives a good summary there of the particular fund. Obviously, on the Simple Invest side, we released the 2024 trust tax return and company trust return as well. So company tax return as well. And that was very similar. That there was the biggest focus was around the new schedule there, and obviously for the trust tax return that had a bigger impact because there was more fields there under the beneficiary section. Split documents. So on the document screen, you have the ability where you are obviously utilizing a lot of our smart docs function. We require those documents to be on an individual level. So on the document screen, the ability there to upload a combined file, click on split document, which will then, the AI will predict how those documents should be split into individual files and name them according to the relevant models. You can then have control over that. And of course, customize it to your liking, but that was something we added obviously there into the June quarter. Aaron, what was happening on your landscape?
Well, there was plenty still going on here. So I guess the main thing was the fact that we continued to see the evolution of the Division 296 tax measures. And at that point in time, we'd had the bill introduced into Parliament, and it ultimately went off to a Senate committee hearing. And whilst the industry had an opportunity to appear before the Senate, ultimately the final report recommended that the bill be passed without amendment. So by the time we got to mid-year, there was a real sense that these laws, as poorly drafted as they were going to go through. So that was probably the primary thing of that quarter, because there was a sense that this was going to land, and we were then getting to the fact that we would have a year to start working with our clients around that. We did see our federal budget, and it was quiet from a superannuation point of view. And the reason why we were ultimately concerned with the Division 296 tax measures was the Greens had really given passage to the Labor Party through the introduction of superannuation on paid parental leave. Now, it was also going to require the support of a number of crossbench senators, which I'd been speaking about at some of these and other training that we've done. But as I said, from that first bullet point there, we were genuinely concerned at this point that these laws were going to go through. The other thing, we did then see the finalisation of the non-arm's length expenditure rules and the fact that it triggers non-arm's length income. So this was part of a particular bill that also included the instant tax write-off. So right on the death knell of June, we then saw those laws get introduced and become effective from the 1st of July 2024. Now, that is in respect to general expenses only, which applies that 2 times multiple to non-commercial arrangements. So things like accounting fees where there's no fee charged and you're not wearing your trustee hat undertaking that. So again, you can go back and have a look at discussions around that particular topic, but we did see those measures become law at that point in time. I think the other thing just worth noting here is that we saw the finalisation of this transitional period of preservation. So ultimately, we were working through to a point in time where preservation moved from age 55 to age 60. So that final transitional period effectively ceased at 30 June 2024, and ultimately now simplified the retirement condition rules because we didn't need to look at that preservation to 59 years of age. We're simply looking at arrangements from 60 and older at that point. And from, I guess, a technical and education point of view, one of the things that we had rolled out in that first half of the year is our new SMSF Foundations course, and that was to complement our Essentials course. So that Essentials course and the foundations course were now on the BGL learning channel. So we do have a range of students working through both of those courses. And in addition to those being available, we also finalised arrangements with the SMSF Association that would provide a complimentary period of membership if you successfully completed either the Essentials course or the Foundations course as well. And I think, Jeevan, the other part that we did was a lot of work around our fund establishment process and really intertwining what we call a workflow or a document flow of moving information from form to form. So if you're setting up a fund, which is the most common one we see this deployed with, is to do that incorporation. The fact that you can then send that information across to set the company and all that stuff up in CAS 360, but move that data from the company into the new fund, allow for the documents and the data to set up your client in Simple Fund 360, and then from there, use that same data again to apply for the ABN TFN, which we have as part of our platform as well. We were looking at the process of the Macquarie CMA, but that process now fits within Simple Fund 360. So I'm sure you're going to talk about that shortly. But again, the idea here is to use the technology stack that you have from a Smarter SMSF and Simple Fund perspective to try and automate that entire fund establishment process. And once that ABN TFN's been received, again, you can push that information, that number straight back into your Simple Fund 360 software as well. So the more that we can sort of use the APIs here to not only pull data and push data between the different platforms, but then help simplify and automate and save time in that process, the more we can do that, ultimately, the better.
So on to July. Cool. So something we released just with DocuSign that was requested was the ability for documents to be digitally signed, but in person. So this was really, it seems counterintuitive, but the firms that were utilizing this wanted the ability to basically run a paperless office and have clients still coming into the office, but the ability to sign on a device such as an iPad in front of them as well. So something that's probably I'm sure not heavily utilized, but really there on the progressive side. The other thing we added was the ability when entering in journals, is the ability to enter it in as a reversing journal. So this was probably more utilized in Simple Invest than Simple Fund, but obviously providing for something like end of quarter, the ability to reverse that journal that was entered in automatically. August, move around. So merge contacts. So obviously it's something that was this is a feature that was heavily requested, I think, since we launched, and it was always pushed back, but we finally now released this. So I believe about 12 months ago we released the ability in the contact screen for the ability to identify duplicates, so you could at least see which contacts were duplicated within your system. Now you have the ability there to merge any of those duplicate contacts across. So it's not something that we obviously enforce, but you can select which one to keep, and obviously the relevant party will be kept there. On the corporate action screen, the DRP has the ability now to automatically add a charity account, and where the excess, I suppose the DRP residuals are being donated to charity to allow for that there directly in the account. Within Simple Invest 360, so again, something I guess the Division 7A screen has been available now for I think around 2 years. So its ability to manage, calculate the repayments, enter things such as unfranked dividends in around Div 7A, and we added the ability to export that out then to a nice PDF. Previously, it was just available as an Excel output. BGL ran its, I guess, flagship roadshow, which was really focused around, I guess, practices as opposed to best practice within the software. but that was around again around the country, around the same types of cities, including I think Hobart as well. And again, will be hosted, I guess, in 2025. For anyone who would like to see it, will be available, I guess, around the country as well. I should mention also, I think, Aaron, you did the same for our March Road shows. They are available as an online version at some stage, usually post the actual physical tour as well. September, so we added some neat things around the audit management, the ability to get a quote for audit tax insurance. So that's obviously an obligation quote through one of our partners there, Audit Cover. As Aaron mentioned, with Macquarie, you have the ability to open a new Macquarie CMA directly from Simple Fund or directly just from Simple Fund. So Simple Investors coming soon, don't allow trust and companies yet. That, as Aaron mentioned, could be utilized for newly established SMSFs, but can also be utilized for existing SMSFs. There's no real distinction there. It's really just, I suppose, providing the ability to not have to rekey any information in. As soon as the data is submitted through to Macquarie, the BSP and account number is available straight away. And then once the trustees complete the KYC that is emailed through to Macquarie and the application is approved, it will also automatically establish a data feed there as well. So you've got a utilization of automatically creating a bank account or automatically getting a bank feed into Simple Fund 360. We added a new wind-up wizard, so that was the ability to provide step-by-step instructions of what you need to utilize within Simple Fund 360 in terms of winding up an SMSF. So we found quite often through a lot of support calls that maybe a step was missed, or maybe it was an infrequent process, so that something was overlooked and was sometimes a bit of back and forth. A lot of the feedback from this wind-up wizard is quite positive, and we're getting a lot of requests for different types of wizards now post this. So it's good to see that this being utilized and users thinking about other applications of how we can do the same thing. Investment income generation. So this was something we added a few years back into Simple Invest 360, where I guess in the case of especially for individual portfolios, they couldn't utilize a data feed because the account was mixed maybe with other personal accounts. So we actually, using the ASX information, automatically create the journals. We now allow this to be done for all entity types. So that's again probably more beneficial where there is no data feed at all, and you've got a lot of income transactions that you need to automatically create. Aaron, over to you for the September quarter.
Yeah, so this quarter is always a busy one because, as you indicated, I guess a lot of the preparation work occurs within Simple Fund 360 with tax stationery and so forth. For us, it is a lot about the documentation. So we have, company changes with, changes to the ASIC fees are a perfect example there, and potential changes that we see with deed requirements, pension documents, PDSs, and so on and so forth. So the very start of that September period is quite significant from Smarter SMSF's perspective. What did happen is we started to see the language from within the industry shift, and you may have then seen, even from the media point of view, the quite aggressive nature backed on the government in terms of their approach around Division 296. So and a lot of this was due to the fact that conversations were being had in the background with the senators to try, and in particular those crossbench senators, around the concerns that were being raised. So they were coming from within the SMSF industry. They were coming from other groups in terms of like farmers, and a range of those. And then you may have seen articles being written in the Australian newspaper and Fin Reviews and the like as well. So this started to heighten the interest of those crossbench senators. And ultimately, the pendulum did start to shift here. So that was a good thing. But whilst this was going on, there were things such as draft regulations starting to be released that needed to deal with, in particular, defined benefit pensions. So one of the things that started to get flagged was there's 5 parliamentarians in government that basically had these old defined benefit pensions, including the Prime Minister, and the calculation was going to exclude him. That doesn't really seem fair when they're trying to introduce these laws. So, as I said, there was a real shift in the way in which the industry was trying to approach this. A lot of it originally was conciliatory, try and listen, try and get in the ear of different senators who naturally are very busy and have a very focused interest on things that are relevant to them and their area that they're responsible for. And then again, like I said, we saw that tone really change off the back of that. One of the interesting things during this quarter was the ATO released an update around what I call the pension Bible. So that is TR 2013-5, when a pension commences and ceases. And whilst it was being updated to incorporate the 2017 changes, so the introduction of the transfer balance cap, one of the things that surprised the industry in the final draft, or the finalization of this draft ruling initially, was the fact that they changed their view, the commissioner changed his views in respect to the failure to meet the minimum pension, or failure to meet the pension standards more consciously. So what we have now is very different to what we have known in the past, because the tax ruling was really focused specifically on what the tax law was saying. And that is if you don't meet the minimum, you don't get your tax exemption during that year. And the benefits that are taken during that year are not pension benefits, but are rather lump sum benefits. So that doesn't change. But what did change is the fact that the commissioner now includes a view around the SIS and trust law elements of this failed pension in a particular year. And what they now make very clear is that for ECPI to be able to be claimed in subsequent years, we need to have a conscious decision to commute the pension to allow for that claim in future years. So the pension can't simply continue and then reattaches itself for ECPI purposes in the following year. There needs to be a formal commutation, so a conscious decision to commute and then repurchase. Now that creates some very interesting timing issues, and we highlighted those in some of our previous webinars, and we'll be talking more about that in the training as we've done both in our quarterly updates, but then also next year as we move into our SMSF days as well. So that's been quite a distinct change, and something that was quite controversial during that period of time. And off the back of the NALI and NALI legislation being finalised at the end of that June quarter, we did then see the ATO start to update some guidance around different areas. So the first one that we saw was the release of TD 2024/5, which is how NALI interacts with capital gains tax. So where you have both non-arm's length component and arm's length amounts, and ultimately how the method statement works to deal with capital gains tax, where you have both non-arm's length and arm's length gains, which isn't really the outcome that the industry wanted, but again, just highlighting some of those issues that we would need to be aware of. As I touched on at the very beginning, this quarter is something that we have a lot of time that we spend on around documents. So we naturally updated our deeds and PDSs, all those things that we spoke about. We also introduced into our pension rollback the fact that you have either member request commutations or you have failed pension standard commutations. And there's that conscious decision that I spoke about, consistent with the views there. And in addition to that, we started to incorporate features for things like fund establishments and deed upgrades with our CSV import. So if you were using an external CRM, using maybe an APS or whatever, and we didn't have that integration available, you can export that information and then push that in to be able to order some of those individual documents, companies, new funds, and so forth. But equally, if you wanted to utilize those, you could export some out of your SMSF software to enable you to be able to undertake bulk ordering around things like your trust deed upgrades as well. And I think most importantly there, Jeeves, is that all of the stuff that we do around our documents have that full integration with not only Simple Funds 360 but CAS where relevant, enabling you to be able to, I guess, get as much information as we can. And I think I can't remember what quarter it was, but we did enhance the API endpoints for the pension commencement as well, so that we not only got fund, trustee, and member information, but we were then able to get details of the components for the pensions once they'd been set up in Simple Fund 360, and then you produce the pension documents from the Smarter SMSF platform.
Cool. Into the last quarter now. So into October 24. So we released a new version of the transaction recode screen. So this screen's you obviously utilize where you want to move transactions from one account to another. So this has been rolled out, in stages, and the old screen is still there, and will exist until, I suppose, all the functionality does exist in a particular screen. But this would be where, for example, numerous cases, an investment you want reclassified, transactions have been incorrectly allocated to one account, you wanted to move it to another, around, say, definitely things like expenses, etc. Or it might be, as I said, a previous operator's done something that you don't agree with, so you want to move transactions now to the relevant account. So that can be done on a date range across the history of the fund, and you've got full flexibility there. We during obviously September, October, we rolled out part of the obviously Simple Fund 360 and Simple Invest 360 education weeks, and Smart SMSF was part of that as well. But I guess a lot of those recordings, which are really just short, sharp, half an hour webinars on a specific topic, again, they're all available on our YouTube channel. So check that out if you want to, I suppose, increase your Simple Fund knowledge. We are rolling out, I suppose, in progress with that, I think in the new year, the ability to be certified within Simple Fund 360. And that's obviously making sure that you're continuing educating yourself about, I guess, really that best practice, and making sure you're using the software in the most efficient manner. Cross into November, auto cover, I think that's a duplicate one there. But we released open banking. So this was probably released slightly earlier to a pilot group of clients. We then rolled out open banking then, and allowed anybody to really jump on board with that. Open banking is a system which is run by the ACCC here in Australia, but it really allows, I guess from a BGL perspective, us to connect to the ACCC and then download bank data from every single bank in Australia. That includes closed accounts, term deposits, loan accounts, etc. So this is something which is quite new. The authorization process is all online compared to the traditional feeds where you needed to get the trustees to sign an actual paper authority form. This is all done online, utilizing, I suppose, the technology there from the ACCC and the relevant banks as well. But if you go on, I suppose, if anyone would like to jump on board, you'll find the relevant information there within BGL's knowledge base. What's also progressing, which I think is now being pushed back to 2026, but there's the ability for those, I suppose, institutions which don't hold a banking license to be part of this system as well. So the likes might be of something like La Trobe or Amex or something like, I think even the buy now, pay later type operators as well to be part of this particular system. So you'll see that roll out, in more detail there in coming years. I think that's a slide that should have been there or not. It's something, but I think that was an event you attended, I think, and presented at there in
our SMSF or the technical advisor days around the country, well, East Coast anyway. So yep, in October that year, this year, just gone.
I had to read the year and make sure I was right or not.
Yeah.
So I guess if you've used Smart Docs 360, the technology of our document capture and extraction, within Simple Fund 360 over the years, we had a lot of requests to be able to utilize that technology outside of BGL. So the likes of, I want to be able to read a bank statement, extract all the data from it, and then push that data into the likes of Xero or QuickBooks. So what we actually launched in November is a product called Smart Docs 360. And again, as I suggested, it allows you as a standalone app to be able to capture information for non-SMSFs, non-BGL clients, capture data, extract the data, and actually then push that into I suppose, relevant platforms, or even export it out to export it out to CSV and utilize that into other platforms, might be like MIB or your own Excel files there as well. If you are interested in that, the full details there on BGL's website. You can actually go then and actually put, register for a trial. There's a free 30-day trial which is available there on our website. December, so we're down to the final month there. So our consolidated reporting stream. So if you are utilizing our Simple Invest product, you are able to generate consolidated reports across a family group or a specific reporting group, as you can see there on screen. And what we added as part of that is the ability to customize the financials in terms of the balance sheet and operating statement, which are prepared. And this allows you to fully customize the layout of that particular report, how things are categorized, where they're actually grouped in the report, etc. So this is something we've actually rolled out there into the consolidated reporting first, and we're planning to actually allow that in terms of single entities, whether it be SMSFs, trust companies, etc. Roll that out across the board so you can have fully customized financials and have full control there over the grouping going through. Our upload documents window. So we actually allow two things here. Is where you are uploading documents there into Simple Fund 360 or Simple Invest 360. As you can see in the top right hand corner, there's the option there, scan docs on this phone. What this allows is to read that QR code. It opens up a browser window on your let's say either mobile phone or iPad or mobile top device. And you can actually utilize your mobile device there as a mobile scanner without actually having to install an app. So you don't need to install anything. That's a secure link that's actually done to utilize that. So it's great where you don't have access to an actual scanner and you want to quickly get documents into BGL. For those who don't utilize the email address as well, you do have the ability to email documents into Simple Fund and Simple Invest 362. So we've made that more prominent. That email address is per entity. So each SMSF or each trust or each company will have its own unique email address. Any I suppose emails which are sent to the email address, the document will be read, extracted, and uploaded there to the document screen. So it means really you've got 3 or 4 different ways to actually get documents into Simple Fund 360. We mentioned before, Aaron, about opening up a new SMSF. Those documents were pushed then into Simple Fund. You've got the ability to upload using our UI. You can upload via email, or you can upload either actually using our mobile app, BGL Engage, or you can actually use that scanning option. So you've got lots of different options there to get documents into Simple Fund and Simple Invest. Aaron, over to you for the last quarter.
Yeah, so we had a very busy final quarter to the year, both from a policy perspective, but also in respect to regulation. And I guess to kick things off, we saw the government try and ram through a whole range of measures through what is referred as a guillotine motion. Now, this was initially the Division 296 measures was forming part of that guillotine motion, but first crack at it by the government was unsuccessful, partly because of the Division 296 measures being included in it. The second motion around that guillotine was successful off the back of the fact that the Division 296 measures were not a part of that. So what that meant was we got to the end of the year and those Division 296 measures still remain in limbo. The superannuation objective bill that did get finalised and is in essence law, it has no real, I guess, binding reference to, or reference generally to, trustees and advisors. It's basically more a policy positioning tool as legislation is drafted. It will become an interesting political football when we move into election mode, as we're sort of starting to see both sides of government. But I think from the point of view of the Vision 296, and I touched on it as the winds of change started to occur during that September quarter. The government clearly in the end didn't have the numbers that they needed from the crossbench. They needed 3 crossbench senators of the 9, and all 9 were in essence against this in its current form. So it's not dead yet. We don't know yet whether they will go back into Parliament for 8 or 9 days in February or not. That is going to depend on the timing of when an election will be called. But we are getting very, very close to these measures not proceeding, at least under the current government, and then it will depend upon what happens both in a House of Reps and Senate point of view come election time as well. What we did see from a bit of, so that was a Christmas present of nothing actually happening, but something that was actually a positive was the fact that the government then decided to register the regulations around legacy pension conversions. Now, these go back to a budget announcement in 2021, 2022, and there was concern that the government was intending on linking the finalisation of these regulations with the success of the Division 296 tax measures. So what we have here is now a 5-year amnesty period that will allow for clients that have a market-linked pension, an old lifetime complying or lifetime fixed pension or life expectancy pension, to be able to unwind those arrangements. Okay, and I'm going to come back to those in a little bit more shortly, but it is a huge positive to enable those clients to exit those pensions if it is appropriate for them to obviously do so, and the 5-year time frame is certainly relevant in that context. I spoke before about the fact that the finalisation of those NALI, NALI measures meant that the ATO needed to go and update a range of literature in respect to how these laws would be applied. So what we then saw is a consolidated draft guidance around the general expenses provisions. So our law companion ruling 2021/2 became 2021/DC2, so draft for comment, and that is expected to be finalised in January, but it did update all of the ATO's guidance off the back of the fact that we now have that 2 times multiple. Also, we saw an update to our tax ruling 2010/1, again, draft for comment around what is a contribution. And really, the guidance that we're seeing here is has addressed the general expenses stuff that I spoke about in the LCR, but also looking at situations where a fund may be acquiring an asset for less than market value. And this also incorporates the fact that we may have a contract of sale, and as part of that contract, we may be doing an in-specie contribution. So we need to be very conscious of the views of the ATO here to say that if we are acquiring an asset and that asset is being acquired for, say, $500,000, that the contract is reflecting the $500,000, even though we may be paying $250 by way of transfer of monies out of the fund, and then $250 may be way of an in-specie contribution, non-concessional. There is a whole range of steps that we must adhere to ensure that we don't taint the arrangement as a non-commercial acquisition, and therefore invoking the non-arm's length expenditure rules that would ultimately have the non-arm's length income applied to it in both the ordinary income, so whatever income that fund may derive over its lifetime, but also in respect to capital gains as well. And again, we've touched upon this throughout the year. If you want to go back and have a look at that, I suggest you do so. And the last one here that's just worth highlighting is we saw the September 2024 CPI figure come out, and that figure around 139-ish is much higher than the sort of 137.3 figure that was needed for the general transfer balance cap to increase next year. So we would need a period of deflation in this current quarter, which I would suggest we're unlikely to see, given that we're in the run to Christmas, and there'll be plenty of spending, not only in the lead up to Christmas, but probably through Black Friday sales and the like as well. So from that point of view, unless we saw some sort of freeze in respect to the general transfer balance cap, which I would find highly unlikely, we will see that general transfer balance cap increase to $2 million from the 1st of July 2025, which then gets you starting to think about strategies and issues in respect to both contributions and pensions. And from that point of view, we have this month as well started to release our SMSF day events, which is hard to believe, but we are at our 10th edition. So, and I know BGL has been there since day one, and they will be running across 5 capital cities. So Perth on the 20th of March. We then have Adelaide and Melbourne in that following week, and Brisbane and Sydney thereafter, finishing on the 1st and 2nd of April. We do have super early bird available at the moment as well. So ticket sales are going strong. So if you want to take advantage of that for you and or your team, you can jump onto our website and go to the SMSF day under the CPD training area and take advantage of that early bird as well. Now, the last thing that I just wanted to touch on here is around these legacy pension conversions, because whilst there may not be a lot of these, there will still be enough for people to have to understand, in particular where you have clients that may be impacted by these. So we have a range of documents in this space that deal with commutations of market-linked pensions. Historically, it's been because you needed to purchase another pension. We've also do a bit of support around actuarials, businesses that need the documents to unwind legacy pensions and stuff as well. But I just want to highlight here some of the steps that you're going to need to consider if you have clients that either have market-linked pensions or those defined benefit income streams. So the first one is just making sure that your deed will allow for that unwinding of the arrangement. Now, the problem with many of these is these pensions all go back to at least or no later than September of 2007. So the likelihood is that the deeds have been updated once, twice, multiple times since that point in time, and you needed to keep the provisions of those deeds within the deed, i.e. carry that information through in those variations. So quite prescriptive rules may have specific restrictions that don't allow for the commutation. So you may need to go through a deed update process unless the rules of the fund more broadly talk about compliance with the relevant regulations. And then so from a smarter SMSF point of view, which we kind of fall into that latter part, what we are then looking to do is having pension documentation around these, noting that some of these will be very old pension documents. You'll add it as what we call a special rule of the fund. So in essence, what that allows us to do is to make an amendment to the terms and conditions of that pension that will provide for an additional commutation ability under the new law to be able to commute it, because these, again, showing my age, were all linked to what was referred to as previously the pension RBL. So there was no commutation ability in respect to these unless they were to pay surcharge, for example. We then have to look at the ability to commute those pensions in their own right as well, and then report these for transfer balance account purposes. And the way in which the calculation will need to be done will vary between whether it is a lifetime or life expectancy complying pension, or if it's a market-linked pension, which also we have a range of factors that we need to include in that calculation, because of the fact that it's looking at not only previous debits, it's looking at amounts of pension that have been taken throughout that time, and the amount that gets taken in the current year as well. So there's lots of work to be done in there. The other thing that is also just worth noting is we are expecting the government to announce a measure to ensure that there is no deprivation under the Social Security Act. So if clients are committing these, Centrelink's not going to come back and try and claw back the income that they've received because of the asset test exemption, either 100% or 50% on these particular measures as well. So if you do have clients from an ATE point of view, it's probably just worthwhile holding on until we see that. We saw the minister announce that yesterday, literally, but we don't have the legislation or the instrument yet around that. But for others that may want to exit these, you can effectively do this right now.